Bitcoin suffered a staggering drop to around $76,000 today, resulting in over $616 million in losses for investors. This significant movement is raising alarms across the cryptocurrency market. Here's what you need to know about today's shocking developments. Bitcoin's recent price fluctuations have left many investors on edge as it struggles to maintain stability above the mid-$70,000 range. This pivotal moment raises concerns about the cryptocurrency's ability to attract new buying interest. If Bitcoin fails to hold this crucial support level, we could see further downside pressure that might exacerbate losses across altcoins. These fluctuations are not just numbers. They represent the fears and hopes of countless investors. In recent months, Bitcoin has faced intense scrutiny, with market volatility heightened by a combination of macroeconomic factors and regulatory developments. Recent interest rate hikes and persistent inflationary pressures have created a challenging environment for risk assets, including cryptocurrencies. Additionally, ongoing regulatory scrutiny in key markets like the United States and Europe has heightened uncertainty, further impacting investor sentiment. The potential impact of these developments is significant. A failure to stabilize could lead to a broader market correction, with altcoins suffering even greater losses, potentially triggering panic selling. Conversely, if Bitcoin establishes a solid floor and encourages renewed accumulation by larger investors, this sell-off might be perceived not as the onset of a bearish trend, but rather as a necessary reset for the market. Looking ahead, the next few days are critical. Market participants will be closely monitoring price movements, trading volume trends, and the behavior of large holders, as these indicators will provide insight into the overall sentiment and potential shifts in risk appetite. Moreover, external economic developments, such as changes in monetary policy or geopolitical tensions, will continue to play a vital role in shaping market dynamics. The question remains, can Bitcoin recover and regain its upward momentum, or are we witnessing the beginning of a more profound market correction? Investors will be particularly focused on upcoming economic reports and regulatory announcements that could influence market direction. To understand the current situation, we must look back at the events leading up to today's drop. Over the past several weeks, Bitcoin experienced a robust rally, prompting many investors to accumulate. This surge was fueled by renewed institutional interest, as major financial players began to explore cryptocurrency as a legitimate asset class. However, this recent upward momentum was accompanied by growing macroeconomic fears, including rising inflation and uncertainty surrounding interest rate hikes. A general shift in market sentiment towards risk-off behavior began to emerge as these concerns mounted. Consequently, a notable shift occurred among holders, transitioning from accumulation to distribution. Historically, similar situations have arisen when traders lock in profits after significant rallies, or when external economic pressures prompt a reevaluation of risk. The market may have simply become overextended, and once key support levels were breached, the selling accelerated. This pattern of behavior is not new. Previous corrections often followed similar trajectories, but were eventually cushioned by renewed buying interest. However, the absence of whale absorption during this downturn suggests that today's context may be different, raising concerns about the sustainability of the current market structure. The impact of this shift is profound, as it has led to increased volatility and uncertainty among retail investors. Many are now questioning their positions and the long-term viability of their investments. Looking ahead, analysts suggest that the market may need to stabilize before any significant recovery can take place. Should macroeconomic conditions continue to deteriorate, further downward pressure could ensue. In contrast, should confidence return alongside favorable economic indicators, we might witness a resurgence in buying activity. The coming weeks will be crucial in determining the trajectory of Bitcoin and the broader cryptocurrency market. The recent decline of Bitcoin to $76,000 has sent shockwaves throughout the cryptocurrency landscape, marking a pivotal moment in the market's trajectory. Bitcoin, often considered the cornerstone of the digital currency ecosystem, serves as a barometer for market health. Historically, when Bitcoin experiences a significant sell-off, it tends to trigger a ripple effect, leading to declines in altcoins and broader market losses. This time, the situation is exacerbated by a notable drop in whale absorption, which refers to the activity of large holders of Bitcoin. Reports indicate that this metric has hit a record low, suggesting that the usual support from these influential players is absent. The implications of this shift are profound. Investors are becoming increasingly skeptical of the market's resilience, putting the popular buy-the-dip strategy under intense scrutiny. Many are now questioning whether the market can recover from this downturn, given the lack of confidence among major stakeholders. The immediate fallout includes a significant erosion of investor trust, which may lead to increased selling pressure across the board. This is particularly concerning for those with leveraged positions, as the risk of cascading liquidations looms large. Adding to the tension are rising macroeconomic uncertainties, including persistent inflationary pressures and geopolitical tensions, which further weigh on investor sentiment. These factors create a challenging environment for both seasoned investors and newcomers to the cryptocurrency space. For the average person, understanding these market dynamics is essential as they reflect the overall health of the financial system. The broader implications of a struggling cryptocurrency market could potentially affect financial stability and investment strategies across various sectors. The technology sector, which heavily intersects with cryptocurrency, may also feel the impact of declining investor confidence. Looking ahead, the outlook remains uncertain. If Bitcoin fails to regain its footing, we may witness a prolonged period of volatility that could reshape investor behaviors and strategies. The potential for regulatory interventions also looms, as governments worldwide grapple with the implications of cryptocurrencies on their economies. As the market navigates these turbulent waters, stakeholders must remain vigilant, prepared to adapt to changes, and ready to seize opportunities in a rapidly evolving landscape. In a dramatic turn of events, Bitcoin's price plummeted nearly 7% in just a few hours, falling from approximately $82,800 to $76,000. This sharp decline occurred early this morning, May 22, 2026, around 10 a.m. UTC, as on-chain data revealed realized losses of roughly $616 million among holders. This drop is significant, as it marks a shift in behavior among large Bitcoin holders who have transitioned from accumulation to distribution. Unlike previous dips where substantial whale support helped cushion the fall, today's movement indicates a more profound selling pressure from major players in the market. Analysts are noting that the typical deep-pocketed support usually seen during pullbacks was notably absent this time, hinting at a more fragile market sentiment. Historically, Bitcoin's resilience has often been attributed to the buying power of so-called whales, individuals, or entities holding large amounts of the cryptocurrency. However, this recent downturn suggests a change in sentiment that may be rooted in broader economic concerns, including rising interest rates and regulatory scrutiny in major markets. Investors are increasingly cautious, leading to a risk-off mentality that discourages buying during downturns. The impact of this shift could be far-reaching. With large holders opting to sell rather than buy, the market may face increased volatility in the near term. This could deter new investors and lead to a broader reevaluation of Bitcoin's role as a store of value, particularly as traditional markets also grapple with uncertainty. Furthermore, the absence of whale support raises questions about the sustainability of Bitcoin's previous highs and whether the asset can maintain its appeal as a hedge against inflation. Many analysts are concerned that if this trend continues, it may lead to a prolonged downturn that could challenge the psychological support levels that investors have relied upon for stability. Conversely, should the market stabilize and attract renewed interest, particularly from institutional investors who have been on the sidelines, there may still be opportunities for recovery. Traders and analysts will be closely monitoring market sentiment and trading volumes in the coming days, as these factors will play a crucial role in determining Bitcoin's trajectory moving forward. The next few weeks will be pivotal in shaping the future of this cryptocurrency. What do you think will happen next for Bitcoin and the broader cryptocurrency market? Share your thoughts in the comments below, And don't forget to subscribe for daily deep dives into the most pressing financial stories.